Alright guys, so what I will be doing in this video, I will be sharing some tips with you guys on how to remain profitable in the Forex market and as consistent as possible. Alright, now as it relates to being consistent in the FX market, you want to use the same type of setup continuously, meaning you work with one setup over and over and over. Alright. The next thing is that you don't over risk on your account. Alright? So if you have $100 account, don't be risking $25 and or $50 off that account. So that's the second one. Always use good risk management. So risk management 1.0 pretty much looks at the amount of money you are going to risk on a particular trade, or how much percentage of your account you are going to risk on a particular trade. Usually I advise person to risk 1 to 2%. Worst case scenario I might risk 5%, but I have to get good confirmation in order for me to risk 5% of my account on a particular trade. You know? So don't over risk, don't over leverage, use good risk management and focus on the same type of setup every single day. Alright? And apart from that, you can just be risking 1% of your account and make 5%, 6%. So the aim is to risk a small amount and to just capitalize on the overall move in the Forex market. So I might be risking 17 pip here. But take for example, if I am risking 17 pip here and the market push all the way down to here and it full TP, I will make 55 pip. The risk to reward in this setup will be basically 3 to 1. So I'm risking 1 to make 3. So this could just be risking 1% of my account to make 3% of the account. Alright, so risk to reward ratio is always important for me. So I'm moving away from the scalping and looking to do more intraday trade where I target minimum 30 pips. 30 pips on every single setup. But what I normally do when I'm starting out my week, I tend to start it light, take the 10 and the 15 pips, but as I make progress in the week, Wednesday, Thursday, Friday, if I choose to trade on a Friday, then those 3 days, I'm gonna hold trades a bit longer where I target the 50 plus pip, the 30 plus pip. Alright, so risk to reward ratio, you can't just be risking 1%, you make 5%, even 10%, because I've done it and other people out there doing it just the same. So the aim is to risk small and just let the trade run. Alright, now another thing with risk management 1.0, guys, whatever you are risking, ensure that you are okay with losing it. Say if you are risking $10, $5, ensure that you are okay with losing that. But at the same time, you can be risking $5 and you make $25 and you make $50. You can be risking $10, you make $50 or even $100, depends on how well the trade run. So risk management 1.0 looks at the percentage of your account you are going to risk, and whenever you are risking that percentage of the account, you are okay with whatever you're risking. Alright, so those are some very important tips, guys. And sometime person might reach out to me and they say, hey, I get in the trade, and as the trade going, draw down, I close the trade and end up in a loss. Take for example, guys, before you enter a trade, let's put it this way, before you enter a trade, ensure that whatever you are risking, you are okay with losing it. Very, very important. If you know that you can't afford to lose $10, don't risk $10. If you know that you can't afford to lose $5, don't risk $5. Risk management 1.0, ensure that you are okay with losing whatever you are going to risk. Alright? So that's the first thing. And take it as I tell you, The more you trade, the more experience you will get and the more comfortable you will actually feel whenever you enter a trade. Especially when you see this type of setup play out, uh, uh, a large amount of time. You're going to be more comfortable and confident in executing on that setup. All right, so first thing, guys, ensure that you are ensure that you are okay with losing whatever you are risking. Once you are comfortable with that, you're not going to have any problem in the forex market, so don't be too jumpy to close your trade. So take, for example, if you enter a sell here, all right, enter a sell here and the market pull back to about here. If you feel the need to close position or close the trade, don't close all of the trade. Just close 50% of your position and just leave the rest to run. Alright, so whenever you're in a trade you feel uncomfortable, instead of closing the entire position, just close a small portion of it and just leave the rest to run. Alright, so because the thing is, you want to give your trade a chance. You want to give your trade a chance, and in the forex market, every single setup is a risk. Alright, but you know the probability of the setup that you will be using, how much time it will play out, or how much time you would have seen this type of setup play out of 10 times, 5 times, 15 times, or whatever the number might be, So that's that. So again, guys, just ensure that you are okay losing whatever you're risking in a particular trade. Do not over risk on your account. Do not over leverage. Don't go full margin on your account. And risk management 1.0, whatever you're risking, ensure that you're okay with losing it before you enter a particular trade. If the trade goes in a small drawdown, you're not going to close the entire position because you're actually giving your trade a chance to play out. All right. And another thing with the volatility index, you have to be really patient with this pair, because if you look right in this era, this is probably about 3 day of consolidation here, and then we get a small push to the downside and a potential pullback to retest, the trend line here for the market to continue to push bearish to probably retest here, and if we break through, then the overall target would be down here, so that's that. But again, very important, risk management 1.0. Ensure that whatever you're risking, you're okay with losing that. Don't over risk on your account. Don't over leverage. Don't go full margin. And you should be okay. And if your trade goes in a small drawdown, do not close the entire position. Give your trade some breathing space. Give your trade some time to play out. Alright? Because take, for example, you enter the sell here. You enter the sell here. Sometime the market will do a little pullback to grab some form of liquidity to continue to push down. But if it hit your stop loss, then you know that whatever you're risking, you are okay with losing that. But if it continues to drive down on it full TP, you're going to make 3 times whatever you're risking. So that's the beauty about it. So you're not risking 100 pips to make 100 pips. You're risking between 10 to 20 pips to capitalize on a 30 plus pip move. That's the aim of using this type of strategy. Start the week small, but as we make progress, we look to hold trade a bit longer. So if you guys can put all of these things into play, you are going to be okay. All right. And as I tell a person, last year this time I was making 20, 30, 15, even 10 on trade just the same. But now we can do 1,000, we can do 500. All right. It takes time, growth. So just go through the process, build yourself up, and do your thing. And the more you use one strategy, and you can identify the flaws and see how frequently this type of strategy play out, the more confident you will actually be when it comes on to executing a particular trade. All right. So just bear that in mind and bless up.